Welcome to IQD Dinar News, your go-to source for the latest updates on currency exchange rates, revaluation news, and insights into the Iraqi dinar. Stay informed and ahead of the curve with our timely analysis and breaking developments. The paragraph highlights that the exchange rate rose slightly in two key cities in Iraq, Baghdad and Erbil. These cities are significant financial hubs in Iraq, with Baghdad being the capital and largest city, and Erbil being the capital of the Kurdistan region of Iraq. These changes are significant because the value of the dollar in Iraq directly affects the prices of goods, services, and overall economic conditions for people in the country. In Baghdad, there are two major stock exchanges referenced in the paragraph, the Al-Kafir and Al-Harithiyya stock exchanges. These stock exchanges play a vital role in determining the daily exchange rates within the country. As the day progressed, the rate of the US dollar against the Iraqi dinar rose. Early in the morning, the rate was 151,500 dinars for every $100. However, by the time the central exchanges closed, the rate had climbed to 151,800 dinars for every $100. This small change in the exchange rate may seem minimal at first glance, but on a larger scale, even small fluctuations in exchange rates can have considerable impacts on the economy. This increase in the exchange rate implies that the Iraqi dinar weakened slightly compared to the US dollar. When the dinar weakens, it means that more dinars are needed to purchase the same amount of US dollars. This situation is a common phenomenon in many developing economies and can be influenced by various factors including domestic and international economic policies, inflation rates, and geopolitical events. In addition to the stock exchange rates, the paragraph also mentions the rates at currency exchange stores in Baghdad. These stores often reflect slightly different rates than the central exchanges due to market demand and supply conditions at a local level. At these stores, the selling rate for $100 increased to 152,750 dinars, which is higher than the official exchange rate set by the central stock exchanges. This difference is expected because currency exchange stores add a margin to make a profit. The buying rate, which is the rate at which these stores purchase dollars from the public, stood at 150,750 dinars for every $100. This is lower than the selling rate because these stores buy at a lower price and sell at a higher price to make a profit. The paragraph then shifts focus to Erbil, the capital of the Kurdistan region. The exchange rates in Erbil are also mentioned, indicating a selling price of 151,700 dinars for every $100 and a buying price of 151,600 dinars. This shows a slightly tighter spread between buying and selling rates in Erbil compared to Baghdad, which may be due to different market conditions or economic policies in the Kurdistan region compared to the rest of Iraq. The rise in the exchange rates in both Baghdad and Erbil can have significant implications for the Iraqi economy. When the dinar weakens against the dollar, it can lead to higher import costs, as Iraq relies heavily on imported goods and services. This can, in turn, lead to inflationary pressures, making everyday goods and services more expensive for the Iraqi population. For businesses that rely on imports, a higher exchange rate means they will need to spend more dinars to acquire the same amount of dollars, increasing their costs and potentially leading to higher prices for consumers. On the other hand, a weaker dinar can also have some benefits for certain sectors of the Iraqi economy, particularly those that rely on exports. When the value of the dinar decreases, Iraqi goods and services become cheaper for foreign buyers, which could boost demand for Iraqi exports and help improve the trade balance. However, the overall impact of a weaker dinar on the economy depends on a variety of factors, including the structure of the economy, government policies, and global economic conditions. The rise in the exchange rate also reflects the broader challenges facing Iraq's economy. Iraq has been grappling with political instability, corruption, and economic difficulties for years, and these issues often manifest in the form of currency fluctuations. The country's reliance on oil exports for the majority of its revenue makes its economy highly vulnerable to fluctuations in global oil prices, which in turn can affect the value of its currency. Moreover, the ongoing efforts to rebuild the economy after years of conflict and mismanagement have put pressure on the dinar, leading to fluctuations in the exchange rate. In conclusion, the paragraph provides a snapshot of the exchange rate movements between the US dollar and the Iraqi dinar in two key cities, Baghdad and Erbil. While the rise in the exchange rate may seem small, it reflects the broader economic challenges facing Iraq and has real implications for businesses and consumers in the country. The weakening of the dinar against the dollar can lead to higher import costs and inflation, while also potentially benefiting certain export sectors. The situation also underscores the importance of stable economic policies and strong governance in maintaining a stable currency and a healthy economy. Thanks for tuning in to IQD Dinar News. Don't forget to like, share, and subscribe. For more updates on the Iraqi dinar and global currency trends, hit the notification bell so you never miss an update. See you in the next video.